What's really interesting, I think, is the fact that REIT markets globally, not just in the US, we've seen it across Europe, we're seeing it across Asia. We've seen that repricing already happen in the REIT markets. In the US, for example, REITs are down, implying real estate values lower by about 15 to 20%. In Europe, the UK, similarly, valuations in the public markets for real estate implied down about 20%. And so, what's interesting today is that investors that are looking for exposure to real estate are able to invest in the listed markets that have already repriced for the impact of rising interest rates. On the flip side, we haven't really seen that happen in the private markets. And so it presents a really interesting opportunity for real estate investors to take advantage of that arbitrage and the pricing differential between the public markets and the private markets. We're seeing that phenomenon happen globally. And so that's something that's really interesting and provides us with a lot of conviction for the listed real estate space today, where we have seen that repricing happening from an interest rate perspective. But at the same time, real estate offers you steady cash flows and cash flow growth that we don't really see in the equity market more broadly, right? Call it tech, other sectors where you don't necessarily have that same level of conviction and strength from a cash flow perspective. That's a place where REITs are able to provide investors and their portfolios with a really great inflation hedge, as well as some really great dividend yields and growth as it relates to cash flows today.
I have a problem with that, Uma, because I think when we get the reckoning in the private sector, I think we're all agreeing there's a reckoning due. My worry is, though, that it's going to be so enormous with the trillions of dollars invested stateside and globally that actually that reckoning could drag down the public sector REITs as well. But you're not so worried about that.
We've really seen that already play out in the public markets, right? We've actually looked at this phenomenon going back historically. We see this play out in times where we effectively see the public markets bottom at the same time as when the private market peaks. And so we're seeing that phenomenon play out today, the same as we have seen it play out historically over the years.
Okay, fair enough. And in which case, where should our viewers be looking in the public sector markets at the moment? Apart from
I mentioned industrial. Yeah, I mentioned industrial real estate. That's a great place to be globally. We're still seeing a lot of really great demand for companies looking to build out their supply chains. We're also really focused on areas with structural demand drivers, right? So if you think about where housing sits across the board, we're seeing unaffordability being a really major issue across the globe from a housing perspective. So rental housing is another great avenue for investors to get exposure to something that has those structural demand tailwinds. Healthcare, as we have an aging population globally, those are the types of things that we're looking at thematically across CenterSquare to invest in and find really interesting opportunities today.